One other factor, the Canadian dollar. Almost a full penny pop today as Canada created 4 times more jobs than estimated in the month of March. So the question becomes, how do you put that into an investment thesis? How do you play that? Or do you? National Bank Financial Portfolio Manager Rob Tetrault joins us now. Good to have you with us.
Great to be here, Michael.
Panic is overblown, you've been saying as of late to your clients. Why?
I feel that given the valuations that we're seeing now in the market has traditionally been overblown on both sides. We know that when there's blood in the streets, we should be buying, and Warren Buffett's been saying it forever. I'm a firm believer of that, and whenever we see an oversell, which I think is what we had in 2015 and in January and in February, it's time to buy, it's time to come in, and I believe that long term, again, we're going to be happy we bought in February, March.
The Economist told me today that the strong jobs data could be a blip. 1 month does not a trend make. Do you concur?
Well, those economists are smart for sure, so I'm not going to disagree with them, but I will say this. I think it's going to be a signal and maybe even a TSN turning point or a Sportsnet turning point in the fact that
Thank you for playing the media game.
In the fact that the people that have been in the sidelines, there's been a lot of people in the sidelines in the past. There's a lot of people on this show that come on and say, I'm going to wait, I'm going to get back in later, I'm going to get back in later. Well, those people on the retail side, they're all on the sidelines.
Right.
There needs to be a catalyst for them to get back in, and I think this jobs report may send a bit of a shiver through the people that are out. They may be saying, wow, it's time for me to get back in, and we may see bigger volume, I think.
So shake out some of the shorts, whether it be actual shorts or just the mental shorts.
The mental shorts, which is the people I deal with, right, on a day-to-day basis.
Okay, so then where would you be playing if, in fact, the trend is our friend? If, in fact, we break through that glass ceiling, as I called it, on crude oil of $40, if, in fact, the jobs data is improving, Alberta led us through the month of March, where do we go?
What an amazing report out of Alberta, eh? Like, that's just, I'd say, stunning. So where do we go? Again, if we're going oil, you and I have had this conversation before, I believe you should be sticking to the large caps. If you want to gamble, if you're in that mood, the small caps, some of those might go belly up, but now that we're at $40, Michael, we're a long way from where we were when people were panicking at $26, aren't we? Like, some of those companies are now for sure going to be profitable. I think we are breaking through that $40 ceiling, and I think we're going to see companies such as financials. I like financials. I think we're going to see the consumer staples going to do well, and I think we're going to see the large cap oils do well in the coming year.
Staples, isn't that sort of an overplayed sector? I'm just going to pull it up while you give me your take on it, largely because I thought that the run was basically done in the staples space. When you look at it on say a price to earnings basis, we're trading 21 times even current earnings.
Yeah, I mean, again, I like to be in the large cap sector right now. I like to be in some quality names, such as specifically on the financial sides. Why wouldn't you want to own a bank right now, right? Like, why wouldn't you want to own a Royal or even a CIBC or some of those large names? Or
a New Flyer Industries. We've talked about that in the past. It's now up 161% over the last year. Is $36.79 an entry point for the bus company?
Not for me right now, but I love this, and I've been on your show before, and I've said how much I've loved this company. I think that acquisition of Motor Coach is going to be significantly profitable. I think there's going to be a huge economies of scales in the coming quarter. I don't think the market's anticipating how much it's going to be. I think we're going to see some cost reduction, and I think we're just going to see the margins improve. I'd like to wait. I mean, it's been running and running and running. I'd like to wait for a pullback on that one and then get in again if you don't own it.
Well, I'm looking for some sort of sign, at least from the technicals, that suggests that there's an entry point at a cheaper level than now at some point in the future. But relative strength index shows the herd is fully bullish on this in a very big way as it trades now at a 52-week high.
Yeah, I feel like every time I'm on and I'm pumping a stock, it's at an all-time high. But last time I was on and I talked about it at $27, it was at an all-time high there too. So sometimes you got to get on the train, right? If it's running away, you just got to get on it and go for the ride. Okay,
so $36.79 street consensus as far as where the stock is 12 months now. Still some equity upside, but largely this is more about, it looks like the dividend adding to it, giving you 6% total returns. Does that jibe with your view?
Yes, and I think we're going to see, I think the margins are going to be better than the street thinks.
Okay, I've got the finance minister in the hopper here. When it comes to the stimulus spending that they've allocated, they're okay with the numbers. The economists are okay with the numbers. What the money guys, such as yourself, don't seem to be too pleased about is the lack of a roadmap to getting back to break even on the budget. Are you concerned about that, or is now the time really to be focused more on the stimulus side and worry about paying the bills later?
Well, I wish the stimulus was a bit more, I wish the stimulus was more I'm concerned about the stimulus for sure, and I'm concerned about the budget, to be frank, because I feel it's partially imprudent spending, and I'm concerned about that. I do like the fact that we're spending and we want to grow the GDP that way. To me, it's a bit of a short-sighted measure. It's a lot of billions of dollars that we're going to be short, and how are we going to pay it back? I don't like, as you mentioned, that there is no roadmap. When are we going to pay that back? When are my kids going to pay that back?
That'll be the question for the finance minister. Thank you, sir.
Thanks, Michael.
Rob Tetrault is a portfolio manager at National Bank Financial. When we come back, finance minister Bill Morneau.